Wow, could it be that I have all the technology up and it's still 30 seconds before 4:10? I'm not sure if that's happened before. All right, we got 20 seconds till the meeting officially starts. Varun, I know you're proud of me, buddy. Whoops. Whoops. All right. It is 10 after 4. Time for the first afternoon meeting of the week. Monday, August 30th. It is my dad's 70th birthday. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I guess the last afternoon meeting with the position disclosure was on Thursday. I am out of that TQQQ short. I got stopped out of it. I lost a little bit of money on it. I think that loss was well worth it. And I added a small Roblox swing today to the long side. So there's the position disclosure. Let's talk stocks. All right. Market today closed up 0.4% in the S&P, 1.1% in the NASDAQ, and down 0.5% in the Russell. So one of the things we were chatting about in the morning meeting this morning was one of the things that we're chatting about a lot of days, relative strength and relative weakness. I gotta make my picture. Yeah, I'm still an MGI. You know I'm an MGI. I'm gonna make my video bigger. Give me 1 second here. So again, one of the things we've been talking about in the morning and afternoon meeting, really this entire year, because it's been one of the key factors, I think, to 2021. It's always an important factor, but even more so this year, has been relative strength, relative weakness, and money rotation. And the reason why it's been so important this year is because we've been seeing this kind of constant back and forth between relative strength in reopening or reflation type trades, which are your material names, your energy names, your financial stocks, your value stocks, a little bit your small caps and mid caps, more IWM related stocks. You've seen a bit of a back and forth battle between that having relative strength and the NASDAQ having relative strength, with your usual suspects of Apple, Microsoft, Google, Amazon, Facebook continuing to lead the cues higher. And until maybe, what's that, a week and a half ago or so, the NASDAQ had taken back leadership. If we can scroll out even further, there was a period of time here where the Russell had leadership from November of 2020, basically till really more like March or so of 2021. So what's that? 1, 2, 3, 4, like 5 months. You can compare that to the Qs. You can just see the difference in the slope here on the IWM versus the NASDAQ over the course of that 5 months. The Qs were going up as well, but not to the same degree as what the Russell was doing. And then in March, it started to switch a little bit. The Qs had a little bit of relative strength in this consolidation period, and then they had a big breakout in May into June, basically. And then we saw 3 months of NASDAQ outperformance compared to this Russell, which has now been stuck in a range since it peaked out in February of this year, which, by no coincidence, February of this year is when we saw the speculative bubble burst, right? That's when all those stocks that we've spent a lot of time talking about had these parabolic moves, like your Jumai into $70, now it's at 20. Your Palantir going to $44, pulled back to 17. 3D printing, Triple D at $57, pulling back to $17.50. So all those stocks peaked in February, right as the Russell popped. Hey Pat, can you try to figure out where that echo's coming from? Got you. All right. So anyway, so that's kind of basically been the story of relative strength and relative weakness here from the market. And then what was interesting was the Nasdaq had been really strong, but sensing that Stefan was coming back from Sweden, out of nowhere, the IWM here, right in front of Options X, started showing more strength than the Nasdaq. Again, it's been a rising tide across the board. The S&P is higher, the Nasdaq's higher, the Russell is higher, but in particular, the movement in this Russell has been the biggest, right? This was a large move from this low here of, it was 210 pre-market on that day, a very quick move in just 4 trading sessions all the way up to 224, 1 day of rest. And then Friday, when Jerome Powell spoke, the Russell really exploded. This has been like the best breakout type candle I've seen in the Russell really since it peaked in February. Yeah, there's been other candles in the IWM that have been green Maribozus with probably as big of a range, but they're mainly coming off lows. Like here, July 20th, big positive Maribozu from the Russell, but that was downside extension bounce. Or exact same thing back here in March, a downside extension bounce with a huge candle. Friday was the first time that we've actually seen that as not just an oversold bounce back, but actually a real breakout. And it cleared a couple important levels. 222 had been what I call like a closing level, even though we did get one close above it or a couple closes above it back here earlier in the month. 222 has kind of been a big closing level for the IWM. It's been able to get above but never really maintain above for a significant period of time. And then 225 has been what I call like the closing level resistance. And on Friday, we took out both in one big day. And what that did was it put the Russell into a period of extension, right? So we're a little bit extended here in the IWM. And this is what I was talking about in the morning meeting today. So again, I just kind of wanted to backtrack to give us some perspective that leads into this morning's trading session and how we're thinking about today. So in the morning meeting this morning, we're talking about, okay, the IWM here has been relatively strong for 5 out of 6 trading sessions compared to the NASDAQ. Had this barn burster day on Friday where it broke through 2 major resistance levels and closed above 225 for the first time basically since the summer trading session started. And it looks solid, but it's also extended. And we spend a lot of time talking about our extension rules. When a market becomes extended, we know it can become more extended, especially if there's momentum there, if there's volume there. However, extended markets need to also correct eventually. They can correct through time or they can correct through price. So I'm looking at the IWM with 5 out of 6 trading sessions of relative strength, but I'm also looking at it now as extended to the upside coming into today after Friday, as opposed to the SPYs, which, yeah, you know, a little bit of extension off the ADMA, but it's like $2 in a $450 ETF, so it's basically nothing. And looking at the Qs, which same thing, you know, coming into today's trading session, we closed on Friday at 376 in the Qs, very small common gap up this morning. The ADMA is trading at almost 374. So $2 of extension in the Qs, $2 of extension from the ADMA and the SPYs. It's basically nothing, albeit still very bullish looking patterns, right? No one's arguing anything about bearishness right now. The conversation we're having is what should we be focused on? And what I wanted to be able to see here was, all right, coming into today, Russell's extended, but it's also been relatively strong. Will that rest? In other words, will we see money rotation go somewhere else? And that is the key, by the way, to a healthy bull market, is constant money rotation from one sector to the next for periods of time. And that's what we've really seen here. It's basically what we've seen since the coronavirus low in March of 2020. Has been constant money rotation in this bull market that's continuously leading to new all-time highs for the S&P. And by the way, it seems like whether the reflation reopening trades are having the advantage, or the NASDAQ stocks are having the advantage, the S&P always seems to benefit from it. The S&P always seems to hold up. Even if the NASDAQ has a little bit of a correction, that's because money was rotating into the IWM, so the SPY holds up. Or more recently this summer here, Russell's been weaker, but NASDAQ has been beasting, so S&P holds up. The S&P always seems to hold up no matter what's going on. So everything's bullish across the board. The question once again is, where do we want to focus our money? And this is also now with the backdrop of seasonality here. This week and next week are usually two of the slowest, most boring weeks in the market. I'm usually on vacation this week. You guys are stuck with me this week. I'm not on vacation because I was basically on vacation for almost 2 years until I got back to New York. I just didn't plan anything. So you guys are stuck with me this week and next week when usually I'm away. But we're going into Labor Day weekend. Earnings season is behind us. Jerome Powell, Jackson Hole is behind us. And these are traditionally two really slow weeks. So on the one hand, I'm looking at a market, I'm like, this market's so bullish, it's just a matter of figuring out what we should be buying. And on the other hand, I'm like, well, do I really want to be buying that aggressively into a market that now has basically zero catalysts? We're past earnings season, we're past Jackson Hole, and seasonality here that tends to be really boring. It seemed like the option flow today in the virtual trading floor was pretty slow, and the midday price action, I remember commenting out loud to Pat. It was like I had to do a meeting today around 11 o'clock, and a half hour later, I'm like, all right, my P&L hasn't moved. I grab some lunch, I come back, I'm like, all right, wow, my P&L really didn't move. I go do another meeting, I come back, I'm like, wow, my P&L did not move. My P&L is always moving all over the place, and it just didn't seem to be doing too much of that, really. Like my P&L almost didn't move from 10:45 till the close today. So that's kind of the big picture on where we're at. Again, obviously it's a bullish market. So then what ended up happening is the Russell took a rest. It took a rest on this extension, but it held above 225, which is what's really important. The beginning of the day saw a quick sell-off on the IWM, gap up, quick sell-off. I commented to the team here at 9:45 as we were extended into 225. I was like, this is where I want to see the Russell pivot. It pivoted and it held above 225, retested it one more time here into the close, but it held above 225 all day. So even though this is a little bit of a weak candle, it held above 225. So that previous resistance held as intraday support today. This enables these moving averages to catch up. That is exactly what you want if you are bullish on small caps, mid caps, speculative type stocks. And the NASDAQ, which was not nearly as extended, really took off today, led by Apple. Apple's clearing of this key 150 level today is huge. I no longer have a position in Apple. I think I said that as I liquidated on this last failed breakout here. I was like, oh man, I'm probably going to live to regret the fact that I, sold out of my Apple position because I've been in it for so long, such a good price. Yeah, I felt really good about the fact that I was out of Apple for about a day and a half, and now of course if I was in it, I'd be making even more money on it still, because it is once again at all-time highs. This is a beautiful breakout of an ascending triangle in Apple through a key 150 closing level on amazing volume. I have no position in it, which is my bad. I probably should have a position. I do still have a position in Microsoft, which looks incredibly bullish. I do still have a position in Google, which is looking incredibly bullish. And the NASDAQ, gave some further lift off and continuation. So the NASDAQ, which was not as strong as the Russell, though obviously gave a strong bounce here, not as strong as the Russell for probably 5 of the 6 last trading sessions, is where the money rotation came into today, as Apple broke out, as Apple did get some option bull flow today, and closed really well. So that's where the relative strength was. That's what we want to continue to monitor. Again, we're at all-time highs, guys. If you're trying to short this market right now, please realize how difficult you're making your life. There's a lot of funds out there right now that are trying to be hedged, or they're shorting the market, and they are just absolutely suffering by trying to be short the S&P or the NASDAQ as these markets continue to ramp up. And again, one of the things that we really noted was that into this sell-off here, we were talking about, we got that information from Pat in his note early one day, was the Goldman Prime desk talking about that the majority of the selling here was short selling and not long selling. What does short selling mean? Short selling means short squeeze. And we're seeing these individual short squeezes happen. You know, one thing we looked at a little bit today was this root. Obviously, they sold this root all the way down. I took one little scalp type trade in it off this little pivot candle here on the ADMA. I liquidated my entire position by $7.55. It was just a little scalp trade. I really didn't like it. I got out of the way quickly. But it is worth noting, I think, that this type of stock, I feel like earlier in the year, it's the same thing. The reason why I'm noting this is not to brag about the fact that I made a very small amount of money on a small move here on an intraday basis. It's just to highlight the market environment factors that we want to pay attention to. These types of moves and these types of stocks back in the beginning of the year, maybe Root's not the best example in the world, but they were not really being met by selling. The gap ups were being met by more buying. And you know, we're just not seeing that in the same way still in this market environment. You can look at Palantir, which is one of the names that we were looking at here for continuation above 25.50 Friday into today. You know, same thing. This is a nice daily breakout or a nice daily breakaway gap. They rolled this thing all the way over into the close. So they're still not having that full-on speculative burst in those small caps and mid caps that I've kind of been looking for. There's been pockets of strength there, but it hasn't always played out. I have like a break-even trade, a real small loser, and another type of name which is similar, the Skills through 11. Skills, $11, a little bit of a level, inside day. So I was looking for the break of that 11 to see if momentum could come in. So just a short-term trade here. I bought some above $11, was able to get my risk covered into this pop to, I think, 11, what's the high here, 11.24. I actually sold some stock at 11.24, and then it came down, got stopped out on the break of the low here. So just a pure momentum opening drive to see if we're starting to see some speculative, I don't know what the right word is, some real speculative gusto coming into the market. And again, just not really kind of seeing the money come into Apple and Microsoft instead. Tesla was probably my best idea for my research in the morning meeting, albeit I was not involved in it. We talked about a bigger daily resistance level in Tesla at 717, kind of these absolute highs. And there's an inside day here with a 715 high that you could have cheated on a little bit. Not the easiest trade in the world, but with that said, Tesla, I don't think that this is ever an easy trading vehicle, but you could have been buying Tesla through the inside day high at 715 versus those opening lows here at 712.73. Is gusto not the right word, Greg? I was looking for the right word. No one. You're just making fun of the wrong word, but I could use the right word. So anyway, Tesla, you know, for $2 or so worth of risk down to lows, $2.25 worth of risk is that's pretty good risk on an opening drive type trade in Tesla. And this is a beautiful continuation bar along with the NASDAQ having that strength. So that's probably one of the better trades that was out there on the day, probably the trade of the day. Hopefully some people caught it because we did discuss it in the meeting. And honestly, a lot of other things didn't trigger. You know, keeping in mind the recent strength in the IWM, I wanted to see if Jets could get above 23.50. It didn't get above 23.50. So no harm, no foul. We can keep 23.50 on the level, on the radar, I should say, for you know, a future trading idea. Palantir gave a little bit of an opening drive type of trade, but then rolled over into the close. So anybody who was involved in that should have been kind of a break-even type of name. I did trade Path today. Path is $65 is the area that I need this to clear above. This might have been the first time I ever went long this stock, and I was talking about it in the morning meeting today. This has been a stock that I've wanted to be long for a while. You know, they're involved in robotics are the future, whatever. I've wanted to be involved in this for a while. I don't think I've ever actually gone long. It's never really kind of given me that technical catalyst. But what's interesting here is the kind of descending line that it's made. There's a couple different ways that you could draw it. And then you've got this recent higher low that's come in. And I'm talking about the August 17th low versus the July 19th low. So you got a little bit of a higher low coming in on this path. And then 65 bucks here is this potential kind of breakout that it started to establish itself, where it starts clearing the 65. Now you get a higher high. This is a Kathy name. It doesn't really mean too much to me. I don't go long it because she's long it. I did actually make a few bucks short the stock on this one breakdown here. It was like a 2 or 3 day trade, I think. Again, even though I want it to be long, we've discussed this in the past, my approach to trading is I want to have that fundamental thesis, but if the technicals are not confirming the fundamental thesis, I'm not going to get involved. And the technicals actually give me a short setup here, where even though I want it to be long, I took it short for a couple days and was able to make a few bucks. But now I'm looking at this thing like, you know, maybe this is finally the long setup I'm looking for. I got this higher low in August compared to July. I've got this clear level at 65. And if you get above the earlier August high of 66.07, now guess what? Higher high and higher low. Kathy's regularly soaking up a lot of this stock, and maybe this thing actually starts to catch a bid. I would categorize this also as a speculative type of name, albeit a little bit more expensive. And I just ran into a wall of selling at $65 in this thing. So I know that the same selling now, I could see it in the tape, I could see it in the charts intraday, and we can take a look at that. I know that the wall of selling that's been in path here on the way down that has not enabled this thing to catch a bid, no matter, I think there were some days here where, you know, one of the cool things about Kathy Wood that I really respect and that I really like, I don't just buy stocks because she's in them. I don't just short stocks because she's long them either, even though I've been on the same side as her and I've been on the opposite side as her. I love the transparency of her actively traded ETF. I actually love being able to kind of go in and analyze what she's doing on a day-over-day basis, because you can have an idea of like what her pricing is on positions, where she's coming in and buying. It has shown me, by the way, no offense to all the positives she does, but it looks like she's an awful trader from an execution basis. It's entirely kind of buying based off of this huge picture fundamental thesis, which fine, you know, that's her shtick, I guess. But sometimes her executions are terrible. But I remember noticing in path here on some of these days that it was like she was doing like half of the buying volume of the entire day on some of those buys, which again is interesting. But this seller that's been selling to her is still there, and I could see it at the 65 bucks today. I ended up liquidating my position into the close. If I could have gotten this thing to clear higher, I would have probably kept it as a swing. I bought a feeler initially at the open in the $65 area, and luckily it was a small feeler because I was pretty deeply out the money on it on lows. When I put in these tails here on higher volume is when I was adding, so I was able to trade it back and forth a little bit, and you know, net I made a very small amount of money on it at the end of the day because I didn't get the close I wanted. And you can even see here in the chart, every time this thing's above 65 bucks, whatever that institutional seller is just coming in and jamming it down. They open it up above 65, they sold this thing all the way down. They try to get it back above 65 here in front of 11 o'clock, they sell it all the way down. They tail this thing above 65 on volume at 120. That means a lot of buyers tried to come in here and buy this thing through 65, and it ran right into that same institutional selling that drove it back down a third time. And then here into 3 o'clock, it was the same thing. It was like I couldn't even go after it. There's just a lot of selling up here in this area. So, you know, path is one that I'm going to keep on the radar. I do like how this daily picture is starting to form, but if that institutional seller is there, I don't have an interest in fighting it. So I got out of this thing for a, you know, a very small profit at the end of the day. And then the only other thing I traded today that I made a small amount of money on because I never got too heavy, but I did add it as a swing trade even though I'm pretty light in it, is this Roblox. Roblox is another company that I've, you know, I like in theory a lot, and it's been about the technical setup in it. I traded it a lot when it was a new IPO. I made decent money in it, and then I just kind of had too much on my plate where I got involved. I got out of the way on it at a certain point. It gave this big move up and subsequent move lower without me. We've talked about on multiple occasions these buys here in the $75 area, which worked out pretty consistently, and then here onto the extension into 80 where it looked like it capitulated a little bit on a small time frame. I came in, I bought some stock at around 80.50 or so, again based off this candle. This, by the way, this is perfect small time capitulation. This is the short-term retracement setup that I talk about in my candlestick class in detail. This is exactly what you want to see. You have heavy selling, increasing volume, and increasing extension, ending with a hammer candlestick as the volume maximized. It's textbook. So 1, 2, 3, 4. This is the 5th red candle in a row. At my buy price of about $8.50, the stock is trading at $8.50. The low of the tail is $80, but the ADMA is at $82.50. So when you have a high volume hammer like this with extension, you have at least a 50% probability, a little bit better than a 50% probability of having a move to at least the ADMA. So it's a retracement trade, and sometimes that retracement trade can become a full reversal. So I see this setup, I'm like, okay, I got 50 cents worth of risk here with a good probability of catching a move to the ADMA. So how does the math work out, right? From a setup perspective. Let's just say you have a 50% chance of, to keep the numbers really simple, let's say you have a 50% chance of getting a move to the ADMA. Well, what does that mean? It means that the difference between my entry price and my stop loss, my out, has to be at least 1-to-1 between my entry price and where the ADMA is currently trading in order for this to be a decent counter trend, counter momentum setup. And I would put a big old asterisk here and say, you're almost always better off trading with trend, with momentum setups. It doesn't mean we do it 100% of the time. If we have companies that we like, or companies that we like that are maybe uptrending on the daily chart, but they're selling off on the small time frame chart, that's an opportunity to potentially be involved in it on a big picture uptrend to get it in on a small picture or a small time frame dip. I love that. Or if it's a company that I really like that's had a bigger pullback on the daily chart and you get this sort of pattern on the small time frame chart, that's also a setup that I really like. So again, if I'm coming in at 80.50, my stop loss is at 80, I got 50 cents worth of risk on it, but the ADMA is at 82.50. Well, that is $2 or so. Yeah, it's $2 of potential reward for 50 cents on my risk. All I really need to be able to be break even in the long run on this is 50 cents of upside, potential upside, for 50 cents of risk, because I have at least that 50% probability of getting a move to the ADMA. Right? This is just math. And if I can get 4x like this is, 4 times my potential risk as potential reward on that move to the lower band of equilibrium, that's obviously even better. And when it's a stock that you like, that's obviously even better. And when it's a stock that you like that's been strong recently, look at this move up here, well, that's even better. I would argue that maybe it pulled back a little bit more than you might like here on the daily chart down to 80. If I was long this, from 75 on this day, I probably would not want to see this thing pulling back more than 84, and it closed below 84 today. So not an ideal close, but a good intraday setup. And for me, closing $1 in the money plus what I booked during the day, I decided to keep a small swing on this roadblock so I can start keeping an eye on it, because I do definitely like what the company does. So that's pretty much it. Probably covers everything I wanted to talk about today. We talked about the market, we talked about the relative strength, relative weakness, the money rotation, things that we're paying attention to. Clearly, it's a bull market. I don't think I got to explain that. Talked about some of the trades I took today, and with that said, I guess I'm happy to answer questions that you guys have. All right, so scrolling up here into the virtual trading floor to about 10 after 4. Yes, I am still in MGI. How'd that MGI close today? Not as great as I would like. We saw some option flow come into that MGI that created this big volume here. Definitely would have wanted to see this thing close closer to highs. But I'm in MGI still from really good pricing. Like it from a fundamental perspective, from a technical perspective, it's got to prove itself. And it didn't do that today as far as I'm concerned. We needed a strong close today near this 21 EMA. We didn't get it. We need to clear this pivot, and what we really need to do is get back above 10. Definitely a lot to like with the fundamentals. The technicals have been lacking a little bit, but I am still in my position. MGI. Yeah, we can take a look at Walmart. Walmart's pulled back more than I would like. So first of all, so you're saying that you're in from 9/17? September 17th? Like 150? I don't really understand the numbers that you're saying to me. But we had this great breakaway gap trade on this day, August 5th. Very low risk above 144. It attempted to establish resistance here at 149, had its earnings report, was a very sloppy price action on what was a good-looking earnings report as far as I was concerned, but broke below 149. This pullback is deeper than I would like. Walmart just looks out of play to me at this point. Now that it's back below 149, if we can get back above 149, I think it starts to look better again. Reminds me similar but different. I've got a little position in Walmart that I've been in for a while, but similar but different to this Disney, which has also just not been a good trading vehicle. This Disney with 2 failed breakouts above this 180 resistance, it just can't seem to get out of its own way. And we've discussed here in the morning meetings, people have asked about it, the potential of overhead supply coming from these 2 failed breakouts. Look at the volume on this day. There's probably some people trapped that are going to be looking to sell on the way up here. So Disney's just been very out of play. Walmart at this point, beautiful trade here above 144, established itself above 149, but failed there. So I think that Walmart's also out of play until it can reestablish itself again. Oh, you're in from this morning? Okay. All right, well, that's better than from this morning. All right, Rich here asking about the Palantir trade and the Palantir idea that we spoke about in the morning meeting. You entered Palantir during the start of the day and sold half at 26.50. Okay, let's take a quick analysis here of Palantir. So we discussed 25.50 as a level to potentially be long versus, I think that we also discussed the pre-market low. I don't remember what the pre-market low was as a potential stop loss. So let's take a quick look. It looks like we have a pre-market low that was as low as 25.40. So if 25.50 is kind of the important level and it's it's opening above 25.50, I like the idea here, given the daily chart, given the relative strength that we've seen recently of the IWM, even though that did not continue today. I like the idea of being long Palantir off the open versus either 25.50 or that pre-market low, which I already forget what price I said it was. I think it just said 25.40. So I like that. So you got involved right in the beginning of the day. You sold half of your position at 26.50. That's obviously a good sale here. I'm assuming on the second bar of the day. And you set your stop for the rest at 26.10. How do I know if I should set my stop on the first pivot or the current low of the day? If it went up, it went up instead of breaking down. All right, so let me just analyze the trade for you. All right, so great opening trade, great opening stop loss. You got your sale, you got your risk more than covered. Now what you want to do, once you get that first sale, once you have your risk covered, that's when you want to really become greedy. And guess what? Look at this daily chart. Forget about the fact that this has this upside tail today. It doesn't matter. You're positioning yourself for success in a trade that is working, and we all have to keep in mind that at the end of the day, we have absolutely no idea whether a trade is really going to succeed or not. We're working in a game of probabilities. We're trying to consistently trade in such a way where the risk, reward, and probability of success is on our side so that we can be consistently profitable in the long run. But I don't care how good the setup is, no trade will work 100% of the time. You'll not make money in every trade that you take, and no one makes money every day. I don't care how good you are. So with all of that in mind, when you're taking this Palantir trade and you've got this great stock and you're $1 in the money and it's at 26.50, you really want to have a game plan for greed at that point. Once you got that sale at 26.50, your risk is covered. There's no way you could lose money in this thing. That is when you want to be greedy. So how are we greedy when we are with the trend on the daily chart? We're greedy by implementing a trailing stop system. I have 3 rules for trailing stops. I'm not going to get into too much detail on this, but it's pivot point, ADMA catch up, and new highs. And for Rich, if you have access to my training program classes, I do a game planning class where I go over this in detail, everything you're asking basically about this trade, where to do your first sale and why, and then how to trail for reward maximization and greed maximization. But I say greedy. You want to be greedy in a responsible way. Like, responsible greed is what we really want. Responsible greed is how you maximize P&L without taking undue risk, without turning winning trades into losing trades. So if you have access to my game planning class, definitely check it out because it covers your trade here almost exactly in detail. So now you want to implement a trailing stop loss system. The problem here is there is no pivot anywhere that actually meets my trailing stop rules. So for me, I actually never would have raised my stop in this position. The only time I would have raised my stop is if a new high actually came in. We never got that. Sometimes I cheat a little bit on my third rule of trailing, which is the new high rule basically, which means sometimes I raise that stop a little bit early. So there is a small chance that when the stock was at 2650 here at 1050, that I would have raised my stop to this low. I do that maybe 10% of the time, or I'll cheat on that third rule. This absolute low is 2609, so my stop would be at 2608. So I really hope you didn't get stopped into this pullback though, because I know you just mentioned to me that you raised your stop to 2610, but this low is 26.9. So I hope you didn't get stopped out of this absolute low, because that doesn't make any sense. You didn't even have the pivot yet. The ADMA wasn't caught up yet. But this is an okay spot to have the stop. And then you would have gotten pulled, you stopped out here, and that's just fine. Why? Because the trade is failing. So by implementing the trailing stop system where you raised your stop, you put yourself in the position to have stock if this thing went to 30 today, where you probably would have made a boatload of money. But in a situation like this where it ends up failing and gives this gross looking upside daily candle, you're still making money on the trade. So if that's what you did and you get stopped out at 1225 when it actually breaks this low, that's a fantastic job. And honestly, if you didn't do that, if you're like, I'm going to be really greedy, it never made a new high here, I'm keeping my stop as the low of the day, and it just didn't close well, so you got out at the end of the day, and you still made a small amount of money for yourself because you never got stopped out, so you should be making a small amount, that's also, it's a really good job. I said this a lot last week. The difference, I think, between a really good trader and a run-of-the-mill trader is not what happens when their trade just straight works or straight fails. It's what happens in all of the in-between times, where the difference between losing money or being break-even, losing money and maybe even being positive, but it's really all on a failed trade, that all comes down to game planning and execution. And that makes a huge difference in the long-term P&L. Anybody can make a ton of money when you buy a stock and it goes up. And hopefully everyone has the discipline to, when you buy a stock and it immediately is failing, to get out. It's all of those in-between times that are really going to make a difference. So if you implemented what we just spoke about here in Palantir, then you did that right, and it's a fantastic job. So that's Palantir for Rich. Next here is from Jonathan on YouTube. I wanted to ask you guys a question about your desk. Do you guys trade options? Yes. I don't personally trade options. I trade equities. But as a group here, we trade options and we trade stocks. Though I would say that probably the majority of us focus on options. The majority of us focus on stocks. And there's a reason for that. The majority of the traders in the ProDesk virtual trading floor here, which is the group, are professional traders at T3 Trading Group. So my thought process as a directional trader, that's primarily what I am, right? I'm trading for direction. I'm buying Roblox at 80.50 today because I think it's going up. I'm a directional trader. So my thought process has always been, why do I want to trade options, which are a less liquid product and subject to time decay? Well, the main reason to trade options is for leverage, basically. But that only makes sense in a retail account, because in a retail account, you're subject to reg T margin of 2x for overnight and 4x for day trading. Why do I want to trade options, which are a less liquid product? For me personally, as a professional trader, where I'm getting all this capital access from T3. Why do I want to trade options, which are a less liquid product and subject to time decay, for capital access when I have as much capital access as I could ever want? So most of the guys on the team here who do trade options, they do it because they have a specific strategy, some sort of spread trade strategy, or because they have a big account, or they're doing a lot of swing trading, or maybe they sell covered calls or something simple like that for cash flow and for hedging purposes. But the majority of us here are equity traders, but you can trade both. So I hope that answers your question, Jonathan. Final U.S. military plane leaves Afghanistan. Good. Jorge, can you explain option flow and the impact that it has on stock prices? Sure. So I should really probably let Pat step in. Probably could let Pat step in. He is behind me. Maybe we'll just have Pat do an afternoon meeting for you guys at some point, because he can get into this in a lot more detail than I can. But basically, when we're getting the large order option flow, and Pat, you just feel free to comment at any point. Basically, when we're identifying the large order option flow that is coming into, we're getting it posted into the virtual trading floor here. First of all, it's a look that we're able to get into what the institutions are actually doing in real time, as opposed to everything else is after the fact, right? Even our good friend Kathy Wood, who are able to see all of our trades the next day, it's still the next day. Let alone, hedge funds, when you're looking at them quarterly with what their new releases are, by the time you're looking at it, maybe they're already selling the position out, right? But we can see in real time very large option orders that come in. And option orders that are that size are typically going to be institutional. So that's that. And it is therefore very typical when we see option flow come in that the stock has a really big uptick. Sometimes that uptick is sustained. Sometimes that stock is not, that uptick is not sustained. The first one that just comes to my mind here is MGI. Got that, one nice option flow today that led to this really big volume and led to this kind of squeeze higher. We saw, again, it was kind of a light day today, but I'm pretty sure Apple had some pretty good option flow in the beginning of the day. I think maybe Tesla had some too. It's not a coincidence that those happen to be the best performers. But it also creates a little bit of a feedback cycle, right? So if you've got a big institution who's coming in and is buying calls, some most likely execution broker is having to take the opposite side of that trade, or some sort of market maker is taking the opposite side of that trade, and then what they're doing is they then have to come in and quickly hedge themselves out. So if they are the one who is selling, then they're then coming in on the bid to buy the actual underlying stock to be able to hedge themselves, and that's what further leads to that uptick. So, Pat, do you have anything to add to that?
No, that's pretty good.
It's pretty good. Okay, so for us, what I'm not doing, what I should say, what I'm doing rarely, I very rarely see Pat post option flow and then just like close my eyes and buy the stock. At this point in my trading career, and honestly, analyzing this option flow is a relatively newer thing for me over just the course of the last couple of years, mainly because Pat. So shout out to Pat. Pat has made me and the team a lot of money by being part of our team. So we love having him. I view this as one of these layers of probability that I'm constantly talking about, right? Like if you're going long a stock and the market is trending higher, you're gonna have a higher probability of success than if you're going long a stock and the market is trending lower, right? The market itself is one of our really important, fairly ubiquitous layers of probability that we're constantly paying attention to. Well, guess what? You're going long a stock and that stock's seeing a lot of flow, you're gonna have a higher probability of success than you would otherwise. You think it's a coincidence that this root had some unusual option activity the last 2 days in a row and then gapped up to $8 today? I don't think it is, because we see that stuff happen all the time. So it's definitely something we pay attention to, but again, I'm not just blindly buying because I'm seeing option flow come in. It is not a perfect mechanism or anything like that, but it's definitely important. So that is the answer to your question, Jorge. Next here from Gabriel. For trades that you have been swinging for a bit, that you are decently in the money, how do you trail in order to maximize reward? For instance, in the Apple trade you exited recently, how do you know it is time to exit with regards to how much it pulls back? Sure. So the short answer to your question is generally when I commit to swinging a position, I commit to the daily chart, meaning I am going to use my original stop loss from the original entry point, but I am now going to be trailing based on a daily or sometimes even a weekly chart. So this goes back to the concept of maximizing reward on risk. So one of the things you guys hear me say a lot is what I'm oftentimes looking for is daily chart reward for intraday chart risk. even on this Roblox example that I'm in, maybe it's not the best example in the world, it would be nice if this closed a little bit better, but guess what? I bought this thing based on a 5-minute chart. Based on 5-minute chart risk. 50 cents risk on a 5-minute chart. Guess what? If this thing is able to make an absolute pivot low here off of 80 bucks, gaps up tomorrow, gets above today's high, works its way back to $90, then maybe it breaks out of this $90 loose resistance and makes its way up to 100 bucks, there is a very real possibility that you will see me in this Roblox stock when it's at $100 where I entered it for 50 cents worth of risk. So that is the intraday risk for daily chart reward that leads to really high risk reward ratios that I'm constantly looking for in my own trading. So what that also means though is, so first of all, that's why I only like to swing positions when I'm in the money in them, because otherwise you're not really in a win-win situation. That's why I have the 1% rule, which I think most of you guys are familiar with it. But I'm also now committed to giving back. What I love to do, another thing we've spoken about is I hate risk, right? I hate when you, like when I first bought this Roblox today at $80.50, I easily could have gotten stopped out at $80 and I would have lost money. I hate that. But guess what? Now I'm $1.50 in the money. I have, and I probably would not come in right now and buy Roblox at $82 and risk $2 in it. But I know that if I get stopped out of Roblox at 80 bucks, I'm still not losing money, right? I'm still gonna make money in this position if I get stopped out of Roblox at $80. That is a win-win situation. So whereas I never would come in and risk $2 of risk, I'm willing to come in and risk $2 of open reward in order to make more. So what I like to do is I like to risk the money that I've made in order to make more. And that is how you can potentially start on a trade with 50 cents risk and get $20 worth of reward out of it. Albeit, what's the probability that I'm gonna get this full move to 100 bucks? It's not fantastic. This thing could have closed better today, but you don't know. And at the end of the day, once you're in that win-win situation, how oftentimes do you actually need a position to pay out 40 times your risk or 100 times your risk? How often do you really need that to be making really good money for yourself in the long run? And the answer is not that often. So I keep that position overnight. I'm committing to swinging it overnight. With the Apple, I did tighten up to much tighter than I typically do. Because I was a little bit concerned, you know, when you're swinging a whole lot of positions, there's a lot of things that you have to juggle, including overall portfolio risk. And I was really concerned in mid-August about a market pullback, which did happen, albeit, once again, very, very, very small. And I was just concerned with the amount of overall outstanding risk I have in my portfolio. So I did tighten up a couple of my swings, including Apple and SXC, a little bit tighter than I probably would have otherwise, because I was almost welcoming the stop out to take a little overall money off the table into August here. So I raised my stop to this low, and then I raised my stop to this low, and I got stopped out at, I think, 149 on this day. That's a very tight stop for me. And keep in mind, I was in this stock, I believe, I took the 128 here as an ad, the 128 breakout, which was a great trade for us back on June 14th. And my original position that I'm in is from this day. Is from September 21st, 2020 at 104. Yeah, 103.10 is the low of the day, 104. So think about what I endured on that 104 buy, right? All the way, this big pullback, this big pullback, this big pullback, this big pullback, to let myself then really tighten my stop up here because I wanted to take risk off the table. And I'm fine with it, even though it's at 153 now. I'm fine with it because that was the game plan that I wanted to do, because I have that portfolio management in addition to individual stock management. If it wasn't for the portfolio management, I probably would have used this stop, in which case I may have still gotten stopped out here. So save myself a few bucks. So that's the answer. A follow-up from Gabriel. In the case you were not expecting a pullback in the market from overextension. Okay, cool, I answered it. Sebastian here, can you check? Yeah, sure, I can check AFRM. What do you think of the breakout at 103? Seems good in the 1 hour chart, but it's definitely extended. I don't like buying day twos So I would call today. So today is really a news event, right? There was news in this AFRM that got this all the way up to $100 today. So, by the way, congratulations to anybody who had this, because this is a name that we have been speaking about a lot as a team, about the $70 level. And anyone who is swinging this, you actually may have gotten shaken out on Friday last week on this degree of pullback. But we speak about this enough that someone on the team easily could have had this into this gap up today. So if you did, congratulations. I don't like buying day twos. So the thing about this AFRM is, yeah, you probably have a decent looking setup on the hourly. Yeah, you do. For $100, starting to build up a little bit of a ascending wedge here on the hourly. This ADMA is starting to catch up. So that's not bad. But I don't like buying this degree of extension on the daily chart on the second day after the news occurred. Do you see sometimes big green day, big green day, big green day? Sure. Look at Pan W, right? Big green day, big green day, big, just extended after the first day, then new highs, then new highs, then new highs, until finally today was the first time you even got a time correction on it. This is much lower probability, though, than actually seeing backing and filling after the first or second day after the big up move. So I don't really like coming in on the second day on a smaller time frame setup when the daily chart hasn't caught up yet. So for me, yeah, I definitely see what you're seeing on the hourly, but because of the degree of extension on the daily, maybe you could try a little bit of a small time frame scalp there and see if you get that momentum through $100 tomorrow. But for me, I kind of would prefer for this to now actually set up a little bit more on the daily chart, let that moving average catch up a little bit more. Jerry asking me about the skills trade today. When you bought skills, $11 at the open, was your game plan stop originally yesterday's low? No, it wasn't on this one. So I actually, this was not the first name I typed here off the open. The first thing I did was I typed a path, I typed up a couple of my swings, and then I typed up skills. So while I did type it up easily within the first 5 minutes of the day, I actually missed this absolute low, and I did not buy at 11. I bought at $11.09. I took the offer at $11.09. And the reason I took the offer at $11.09 is because, so I very specifically said in the morning meeting, first of all, I don't love the company. I've said that in the past. And I don't really love this daily chart in skills because it's been weak compared to the other speculative names. And, it's got to really get above 11, and it's got to do it on momentum. So I want that real momentum buy at 11. And the other reason I don't love skills is because I think the reward on it is more limited than I would like. Why is the reward limited? Because I got the 21 EMA at 1173. Right above that's $12 resistance. Right above that is $13 resistance. Right above that is $14 resistance. So coincidence, that's more or less all these whole numbers. But I've got so many levels of resistance here on the way up where I know this is going to be difficult. Like, I almost feel like best case scenario is getting a move to $12 and then it becoming difficult, and then maybe I can get a move to $13 in time after that. So my whole thought process, my game plan on skills, which I discussed in the morning meeting today, was I only wanted to be involved in skills if I could do it as a very low risk momentum trade, ideally through 11, and have really tight risk on it. Then the risk reward is worth it. If I can just get that move to $12 and I have 10 cents or less worth of risk, I got a risk reward of at least 10 to 1 on just the move to 12. So that's what I'm looking for. I typed it up a little bit late. So it had already put in its low and was trading up, and it was doing it on volume by the time I looked at it. And then I said, oh, look at the volume. Oh, look, it's above 11. Oh, the 80 EMA in the 5 minute is not caught up to lows. Like I said, I don't like that because that means I have a higher probability of a shakeout with it still working. Like, I hate, and this is what happened today, I hate when I get stopped out of a stock when the 80 EMA on the time frame hasn't caught up yet, because I don't know that my idea was wrong. Because again, there's a much higher probability of a shakeout if the 80 EMA hasn't caught up yet. So I don't know if the idea itself on skills is wrong. It easily could have went to 1095, shaking me out. I'm hitting out the low of the day, and then this thing goes to $12 without me. But it wasn't the trade. These are momentum names. That's what I say about these types of speculative stocks a lot. They're momentum names. I don't like buying the dip in skills, Wish, Palantir. I don't like buying the dip in those stocks. I want to buy these stocks high to sell them higher when volume is coming in and when momentum is coming in. So by the time I typed it up, the inside offer was $11.09. The low of the day was already established at $10.98. The ADMA hadn't quite caught up, but I kind of felt confident, I guess incorrectly, that the ADMA would catch up to that low before I could get stopped out, just because of the volume and the opening bar and the break of this 11. So I said, guys, I'm in skills. I took the offer pretty heavily. I bought a lot of stock at $11.09. I sold half my position at $11.19. I sold a little bit more on my position at $11.24. So now basically my worst case scenario is basically being break even on this thing. And that's what happened. The worst case scenario happened. Despite this great opening looking volume, despite this thing breaking $11, despite this thing looking really good here in the beginning of the day, it totally failed. I got stopped out in the break of the opening low for a break-even trade. Was definitely running through my brain like, oh my god, what if I just got shaken out? And that's, I know myself well enough to know, this is why, by the way, I hate having stops that are above the ADMA, because I get in my own head about it. There's a much higher probability for me, which is a bad thing, to come in and fight a stock and be like, oh man, they just shook me out. Then you rebuy a little bit higher, then you get stopped out again, then you rebuy a little bit higher, and you get stopped out again. Has anyone ever played that game? It's a terrible game to play. It's called churning. But I know myself that I have a higher probability to fight a stock or to potentially churn a stock if I don't feel that my idea itself was wrong. So I like to only have stop losses in place where I know the idea itself is wrong. In skills here, because the ADMA didn't catch up, I don't know that the idea is wrong, but I don't really like the company, and I'm not in love with the daily chart for all the reasons I said. So I was totally fine with this one, actually. And even though it definitely went through my brain for a hot second of, oh my god, you just got stopped out of something that could still work, I never re-entered it, I never did anything. And then in hindsight, when I look back, I was very happy with myself for just having the break-even trade and getting out of the way. So that's in detail for me on skills there, Jerry, to answer your question. GSAT is still a company? Gabriel here with another question. So from Gabriel, when do you buy on pullbacks? What do you have to see? Like a really good news that means a fundamental upgrade. I mean, like a news that means that the stock will likely perform better. Or when do you think the company is good, or when you think the company is good? Okay, yeah. So basically, Gabriel is asking a question off of one of the things I just said before. So what I just stated is that for certain types of stocks, like a skills, these are stocks that I consider to be momentum names. Basically, anything that bubbled in February is a momentum stock. That's a speculative momentum stock, right? Look at the bubble in February in skills, momentum move here, going from $13 in November to $46 in February, ridiculous, followed by a move from $46 down to $10, right? Destruction. You know, bubble burst, bye-bye. These are the types of stocks, the money, you know, you're buying this on the dip and it just keeps dipping, right? That's not what you want. Because who knows? Is this a good company? Is this the next Amazon of online video game gambling or whatever it is that they do? Probably not. I have no idea. I want to be buying this when the hot money is coming in. I want to buy high to sell higher. That's the better trading in these types of names than trying to buy. Imagine trying to buy a dip over the course of July and August in this thing. Like, oh my god, look at this chart. It's disgusting. Just literally since July, 2 months here, it's gone from $22 to $10. It's over a 50% pullback in 2 months, and that's in a bull market. That's with the S&P at all-time highs. It's disgusting. These speculative stocks like to buy high to sell higher. So part of it is knowing the type of stock. That's very different than Microsoft. I love buying dips in Microsoft. Microsoft tends to not be a momentum name. Microsoft is a very real company. Microsoft is an uptrending stock. So when Microsoft gets a little bit extended higher on the daily chart, that's when I don't like to be buying it. When Microsoft has a pullback into equilibrium and creates a pivot that could be the higher low of a trend, that's when I want to be buying Microsoft, buying dips on that. And then again, like, and what if this small time frame? I mean, well, what did the low look like on Friday? I really don't even know. Yeah, look at this. Not perfect, but look at this small time frame extension of the downside. Take Microsoft. You all know what the daily chart looks like because we just looked at it. And let's just say it's very similar, but it's not ideal. When the ideal was Roblox. What if you could have Microsoft's Friday low look like what Roblox did today on its 5-minute chart, right? Let's go back to Microsoft. So now you got this daily chart that's pulling back into the area where you expect it to pivot into this equilibrium zone, and on the small time frame it's getting extended to the downside, and now it puts in that hammer. That hammer has a much higher probability of a small time frame reversal that leads to daily chart continuation than the daily chart reversing and coming down. These companies are where I really like to buy dips, or even the Apple buy that I just mentioned when I got that stock at 104. That was a dip. Right? Look at this low here in Apple. It was extended. It was massively extended. I remember this day because we called the top here pretty much perfectly in August, beginning of September in the market. And then Apple, along with everything else, had a really big pullback. Apple pulled back from 137 in half a month down to 103. It's a big pullback. And now on this day here, it had a huge gap down. Apple opened at about 104-ish that day, right? 104.50 with the 80 MA at 112.25. Same extension rules, right? Apple is $8 extended to the downside after a couple week pullback. That's bringing this thing from 137 to 103. What's that on a percentage basis? It's a bear market, right? It's more than 20%. So Apple is in a bear market. Apple, of all companies, is in a bear market from a high to low that's like over the course of 3 weeks and is extended to the downside. That's a dip I like to buy in like a beautiful company that it's hard not to believe in. So it depends on the stock, and this is why it's important to know the personality of the stocks, understand the relative strength and relative weakness, and money rotation, and all that other good stuff that we've been talking about. Jonathan asking, what indicators do I use, and how do you use them to trade? Also, in this market, do you mainly scalp? I don't look at many indicators at all. I look at almost no indicators. I look at information. So take a step back. Here's the thing about indicators. Indicators are exactly what that word means. They indicate something, right? In other words, they can act as like a layer of probability, but they're not a trade in and of itself. You don't just buy because of a MACD crossover. You don't just buy because the RSI is at a certain level. You don't just buy because the stock is below a Bollinger Band. You don't just buy because of any of that stuff. Those are all pieces of a probability game. So I actually think it's a detriment when brand new traders are using indicators, because what ends up happening is they learn to overly rely on the indicator as opposed to relying on price action itself. If you're a new trader, learn price action first and then start to implement indicators. The chart that I'm showing you right now of Apple, that's it. I got Japanese candlesticks, I got volume, I got an 8 and 21 EMA. And those 8 and 21 EMA is a very important tool to me. And that 8 and 21 EMA actually tells me where the stock is trading versus the 8 and 21 EMA. Actually tells me a lot of the exact same information that indicators tell me. So I don't really look at a lot of indicators, but I pay attention to them when others supply the information. For example, Patrick over here, great young trader, been with us for some years, has a beautiful morning note that's a really important part of my research process that I read at about 8:30 every morning. It gets posted into the ProDesk virtual trading floor. It's all big picture stuff, but he also does a big picture breakdown of the S&P every day for the same reasons, for positioning and everything else. And guess what? He looks at an Ichimoto cloud. He looks at a Bollinger Band. He looks at all this other stuff. He's got some other moving averages in there that I don't utilize. I'm not ignoring that information that he's posting it. I'm just not watching it on every time frame chart all the time or every chart that I'm looking at. It's just an extra piece of information. So for me, what you're looking at is all I need. but I will pay attention to the information that others supply. And again, I suggest if you're a newer trader that your charts are relatively simple. I love when I see a brand new trader, it's their first day, back when we were able to have traders on the trading floor here, and they would set up their chart and it would have like 500 indicators on it, and I'd be looking at it like, you can't even see where the actual stock is trading. There's so many lines going through your chart. That doesn't do you any good. Learn to read the price action in conjunction with the volume with a couple of moving averages. Then over time you can add in those other moving averages. Those other indicators. I don't really use them at all. I do pay attention to them minimally. Sebastian here, any thoughts on AMD? Yeah, AMD was the trade of the day for the team on Friday. We crushed this one early on. I was involved in it, but I closed my position into the up move here. Yeah, AMD was great early on, good volume. I think we saw option flow coming into AMD and NVIDIA. It closed really well. 112 is a bigger daily level in it. It also had the inside day. Oh no, it wasn't an inside day, huh? I thought it was. 112 is definitely a little bit of a bigger level here. I don't like that it closed above 112, but I'm not that it closed below 112, but I'm also not overly concerned about it because Friday was such a big day and it was trading as high as 115 today. This stock now cannot get below Friday's low though. Friday's low I think is a key stop loss point for going forward. If not Friday's low, definitely Thursday's low, which is the low of this consolidation. You want to see this thing hold up and give some upside continuation here. The champ's tongue. Oh man, it's funny, Rich. Oh man. All right, gang. I think we covered all the questions. It is 5:16 p.m. here on Monday. I got some other work I got to do, so I'm gonna wrap things up. Guys, get involved in ProDesk. If you're watching online, get involved with the team here. We have an awesome team. You're missing out on a lot of stuff like Pat's research note in the morning, our morning meeting where we're talking about our ideas for the day. Reach out to info@T3Live to find out about how you can get involved with the ProDesk virtual trading floor. And I will see everybody tomorrow. Have a great night.